Hey, this is James Pelton, and just wanted to do a video here laying out my first strategy for crypto investing. And this is my first strategy. It's not my number one strategy, but it's my first strategy because it's by far the easiest and the simplest. And this strategy is just called a HODL, which means hold on for dear life. Okay. So basically, this is just similar to a stock, maybe, but you just buy a coin and then you just hold on to it and you just hope the value goes up. So this is kind of the most popular crypto strategy, and sometimes it's very, very effective. Shiba Inu is kind of one of the big cryptos that you might have heard about in the news recently. But with this coin, without any strategies or anything like that, if you had put in on January 1st $1,000 into Shiba Inu, January 1st of this year, 2021, then when it hit its peak on October 27th, that $1,000 you put in would have been worth, I think, $950 million. So almost, we'll just say $1 billion from January 1st to December or October 28th. $1,000 would have became $1 billion. So this hold on to coins, if you have the right coins, isn't a very effective strategy. The problem is that Shiba Inu did this, up 1,000,000% or whatever it ended up being. But most coins don't do that. So it's hard to find these diamond in the rough coins like Shiba Inu. So if you're going to do this strategy of just buying a coin and hoping it goes up, I would recommend that you stick with kind of the coins that you're very confident are going to go up. So this isn't a monthly passive income strategy. This is more just like buying a stock and then you hope it goes up in the long term. So the two main coins that I would use this strategy on are the two that you've probably heard of, that most people have heard of. So the first is Bitcoin. And Bitcoin, has been around for a long time. And actually, I was not a believer in Bitcoin. I remember back in 2013, it was trading at about $100. And I remember Bitcoin was on the news and things like that. And I didn't think it was going to last. I thought it was a fad. I thought it was going to go away. I was definitely wrong about that. But I think it would have been riskier to put a lot in back then because the market cap, which the market cap is just basically if you add up all the tokens that are out there times the price of the tokens, you have how much value there is in that token total. And I think back in 2013, Bitcoin is under $1 billion total market cap, whereas today it's over $1 trillion. And by the way, this website I'm using here is coinmarketcap.com, and you'll see me use that in a lot of my videos just to kind of get information about different tokens. It'll show you the market cap and what the price is currently, how that is over the last 24 hours, last 7 days, 30 days, 90 days, etc. So you can see the market cap on Bitcoin is $1.2 trillion right now. So and it's trading $30 billion a day. So there's no longer, in my opinion, there was always this risk if you were back here in 2013 that Bitcoin could go up, could go down, and then it could go to zero. And people could decide Bitcoin isn't worth anything and your investment could go down to zero. I do not think that that's a possibility anymore with $1 trillion market cap. It's just not going to happen. It's not going to go down to zero. I'm guessing when you look at the news and you look at the number of people that have adopted Bitcoin, there's not that many people that are very familiar with it. I was listening to some research the other day, and they said 82% of Americans say they know nothing about cryptocurrency. So that's 82% say they know nothing. So there's still a lot I think we're on the bottom ends of what Bitcoin would be. It wouldn't surprise me if it was up to 100K by the end of the year. And it wouldn't surprise me if within 10 years it wouldn't surprise me if it was up at like 1 million. So I think it's going to go up, and I think it will go up 2x a year, maybe 3x. I think in 10 years, it'll probably at least 10x. So I think it's a pretty safe bet to just buy Bitcoin and just hold on to it and just, let that grow. So that would be my first coin that I would do that with. I would not do Shiba Inu. I think we're past the prime here. I just had it up to show you what this hold on strategy can do over time. But the second coin, which is the second most popular coin, if you look at market cap here, it's $540 billion market cap, but that's Ethereum. And Ethereum's a little different than Bitcoin. Sometime I'll do some educational videos. I'm a computer engineer, so I like the technical side of things, but most investors don't care as much about the technical side. They're just like, well, what's going to make me money and what's not going to make money? But Bitcoin is basically just, Bitcoin does not have any utility in it. So it's just something that holds value, kind of like gold. I mean, there might be some utility for gold, but for the most part, it's just something that people say is valuable, so it's valuable, right? That's kind of what Bitcoin is. Ethereum is a little different. Ethereum actually has utility behind it. It transfers data, and sometime we'll do a video more about that. But as more and more people get involved in cryptocurrency, we're going to see the price of Ethereum go up. And it would not surprise me if the market cap on Ethereum at some point catches up to the market cap on Bitcoin. It would not surprise me at all. So I think Ethereum and Bitcoin are both pretty good things to just buy and hold on to. And I mentioned I'm going to just be transparent about what I have into different things. So currently, I think what I put in 25K into Ethereum and 15K into Bitcoin. So again, they're not my biggest holdings, but it's just I'm just going to buy them and hold on to them. And I use Binance for most of my trades, but for these that I'm just going to hold on to, I use BlockFi. And I use BlockFi because they provide interest on what you hold in BlockFi. So on my Bitcoin that I have in BlockFi, not only do you get the price of the coin going up and down, but you also get this 4.5% APY on the Bitcoin. So I'll get Bitcoin whether or not the coin, if the coin price stays the same, I'll get 4.5% interest on that, and Ethereum 5%. So I use BlockFi for those purchases. So that's strategy number one. It's the simplest. You just go into BlockFi, create an account, and I had a video to show you how to do that. You fund your account. BlockFi is very, very user friendly, and you can fund your account using either ACH, which limits you to $10,000 per day, or you can do a wire transfer, which takes 1 to 3 days, and you can do pretty much any amount. But you just fund your account. If you want to do a bank transfer, it'll have you link to your bank. You say which bank you want to link to, how much you want to put in. Again, your daily limit is 10,000. Then when you have your account funded, you just go to trade, and then you just say, hey, I want to buy $10,000 worth of Bitcoin. And it'll say, okay, that is a 0.15 Bitcoin right now, because Bitcoin's trading at like 64,000 and some. So if you wanted to buy a whole Bitcoin, you'd need 65K. And you can see it tells me, hey, you can't do that over ACH. You're going to have to send in a wire to do that, because it's hard to get the numbers in the right place. There we go. The ACH trading volume limits you to 10K. So I would need to wire in the 65K into BlockFi, which they make pretty easy. They give you where to wire it to, the wiring information, and you have to make sure is you just take this to your bank, or if you can do it online, you give them the routing number, the account number, and make sure this notes. That's a very important part of the wires in. The notes is what actually credits the money to your account, so make sure you don't leave that off. But you go ahead and wire it in. You can buy your Bitcoin, buy your Ethereum, watch the interest accumulate, watch the price of the coins go up, and that's strategy number one. Thanks for watching.